Hi, this is Aditya. Today I am going to share you how to invest in stock market whenever a huge crash happens. For example, on 22nd December 2020, there was a huge crash, single day crash. So market fell from 13,740 to 13,200 levels. Nearly 540 points lost in a single trading day. If you want to encash such events, then you can buy out some stocks. Which stocks to buy for common man? I'm going to tell you today. If you are buying on individual stocks, you have to do lot of analysis. Whether is it a value stock? What is its current market value? Is it in the overbought zone? Are the company fundamentals good? Technicals good? For which common man might not have enough time. For those people, I am going to suggest a way wherein you can pick a mutual fund which invests directly in the Nifty 50. Nifty 50 is an index which contains 50 stocks, 50 stocks. Those 50 stocks are nothing but you can search in the internet. For example, Hindustan Unilever, HDFC, ICICI Bank. So in these 50 companies, all sectors are covered. FMCG, manufacturing, pharma. So whenever there is a huge crash, instead of buying on individual stocks, say you want to invest only 10,000. Then if you want to if you want to buy stocks directly, then you have to buy two Reliance shares, one HDFC share, because one Reliance share itself is 2000 rupees. With 10,000 amount, if you want to invest, if you are a low risk averse person, it would be difficult for you. At that time, you can choose some mutual funds which directly invest in these 50 stocks, so that the minimum lump sum investment is only 5,000. And whenever there is a crash, for example on 22nd there is a crash, so if you have invested 5,000 on that day, then in the coming days you can observe the rally for your money. So what you have to do is either you can go to Funds India or Coin or Paytm Money, any mutual fund app for that matter. There you can go to mutual funds, search. So here you have to type Nifty 50. There are some mutual funds which directly invest in this Nifty 50 stocks. For example, DSP equal Nifty fund. So this DSP equal Nifty 50 fund invests your amount proportionately in all the 50 stocks in the Nifty index. So you can just select invest. So the minimum investment is only 1000 rupees. So with 1000 rupees you cannot even buy one Reliance stock, because one Reliance stock itself is 2000 rupees as on 2020. So if you want to invest only 1000 rupees, yes, you can invest in part of Reliance stock by investing in such mutual funds. You can also invest in coin platform of Zerodha. All you need to do is in the search bar you have to type Nifty 50. You can also invest in Nifty 100, that is top 100 stocks as per their market cap and company fundamentals in India. Nifty 50 means it is an index which contains top 50 stocks in India. See, DSP Nifty 50, HDFC Index Nifty 50. So this stock directly invests in the stock market, Nifty 50 companies. For example, as on December 23, as compared to December 21, there is a market fall, and hence it is shown as minus 3%. So whenever there is a market crash, directly you can invest in such mutual funds. In the description, I will give you the link. If you want, you can use that to open an account with Zerodha or with Funds India. Opening charges for Funds India is completely zero and free. Whereas for Zerodha, if you directly want to open only a mutual fund account, for example with Coin, then you will be charged some nominal fee. Whereas in the Zerodha, if you already have a demat account, or if you first open a demat account and then if you try to open any mutual fund with coin, then it is completely free.